Okay, good morning, everybody, or afternoon, I guess it is now. I just wanted to welcome you. My name is Jessica Kapkar. I'm with the Better Business Bureau. And we wanted to make sure that you guys, we know it's weird times right now. So I think we're all kind of navigating this new landscape together. Part of what we want to do is make sure that our businesses and our consumers have as many resources and as much information as possible. And we wanted to make sure that we are pulling in some experts to provide that information for you guys. We will be recording this webinar, so it will be available afterwards if you would like to refer back to it, or if you forgot something, or just want to have it for your records. So we will send out the link to that as soon as we are finished with the webinar. We will also have it on our trustlocal.org website. It's a resource page for businesses and consumers. It will have all of the information. We've had 4 webinars in the past week with different professionals and different partners of ours. So all of those webinars will be housed there, so you can refer to those as you would like to as well. There's a survey on there for businesses and consumers to fill out to let us know what your pinch points and what your needs are in the coming weeks and even months, because I think this is a landscape that's going to be
Hello, everybody. My name is David Kaplan. I'm the CEO of Panoramic Strategy, and really thrilled to be here with you today, and thrilled that you're interested in the topic of staying ahead of the curve in times like this. And I'm excited to share some of the insights that I'm providing to clients and some of the recommendations that I'm making to folks. But first, I wanted to take a moment just to introduce myself. My very, very quick bios over the last 5 years or so. Myself and my team have been helping values-driven organizations, and we've partnered with the Better Business Bureau as well as a number of members over the years, providing CFO services and strategy services to help folks get to their next, really make those hard decisions, but also carve the path forward through those numbers, through the financials, to help them actually get where they're trying to go. And I had to chuckle at my own bio for a second, because when I said when I'm not working, I'm outside, I'm with my wife and 2 daughters, or reading a great book. As it turns out, during this time, I must have the perfect hobbies, because apparently it's the only things that we can be doing right now. And so, I'm not going to waste any time. I'm going to jump right in to the topic for today, which is staying ahead of the curve financially, and talk a little bit about what we're going to talk about in the first place. The first is just staying informed, and I'm sure everyone here is doing their best to stay informed about the SBA loans in particular. But all of my recommendations that I'm going to go through here have the additional caveat that they are that they really are in the context of the changes that are happening with legislation quickly. So please make sure that you're checking any of these recommendations against updates to that legislation or to anything else that might be changing in the environment around us. And I find, that while numbers are absolutely critical, the mindset for those decisions is even more important and becomes the foundation for the decision making that we're going to talk about today. We'll then step into what is truly most important in a scenario like this, which is liquidity, making sure that you're doing everything you can to build cash available, followed by asking the hard what if questions that many of you are asking yourselves implicitly and maybe even taking action against today, but doing this in a way that is measured and reasonable without using so much time is really important to make sure that your decisions are made in the context of what you believe could happen. We'll talk about some expense management tools along the way and some unique opportunities. I'll talk about a few of my clients who have found some really different and interesting opportunities that have arisen during this time frame. I'll also make sure that along the way we're going to stop a few times and see if folks have questions. And if we don't hear anything about questions, don't worry, we'll also have time at the end to have questions. I certainly left plenty of time at the end of this webinar. I find the quote from Nietzsche really, really poignant here, that madness is the result not of uncertainty, but of certainty. And the truth is, while we may have a sense of certainty in any given moment up until 3 weeks ago, the truth was behind that certainty, there is always uncertainty. It just happens to be more present now and certainly more at the forefront of our minds. And included in that uncertainty are all of the changes happening around us. And I encourage you again to stay informed about the CARES Act and the Families First Coronavirus Response Act and SBA disaster loans, because those rules have changed even in the last couple of days. I'm not going to focus on those, but I would point out that it's expected that today or tomorrow, maybe latest Monday, it's expected that the applications will be out for the payroll protection loans. And simply my very, very fast recommendations that I'm making to folks on this front is, one, make sure you've established a relationship with a bank and banker who can submit your application for you and make sure that they know you're ready to apply. Second is to gather all of the information right now and make sure that you're ready, because the expectation is that they will be oversubscribed by a significant amount, and that will drive some of the decision making. And the quick clarification that you can in fact apply for both the disaster loan, which is separate from the payroll protection loan at the SBA. You just can't use them for the same purposes. I was also on a webinar late yesterday where there was one more comment made that if you are deferring the payroll tax credit under the under the SBA rules, that you may not be eligible for the payroll protection loans. And so my recommendation, before anything else, if you plan on applying for the payroll protection loans, focus solely on the payroll protection loans and then turn your attention back to the other items. And if I'm able to answer questions on that later, I'd be more than happy to, since I'm helping dozens of organizations getting ready to file and apply. But the truth is, so much can change quickly. The mindset that I find to be incredibly important in times like this is to prepare for the worst, which is a lot of what we're going to be talking about today, but also hope for the best, seeing those unique opportunities and positioning for future growth. Because if you make decisions now that limit your ability to turn resources into an opportunity later, and you just go back to what you were doing before all of this started, then chances are you've missed the point of what happens during a crisis like this. So many amazing companies were founded in the financial crisis 10 years ago, notably Uber, Airbnb, others. And the opportunity that sits inside of crises like this is in so many cases what defines companies coming out of these crises. We will be focusing more on the right side of this balance beam of the stress testing and operating lean and risk management today. So the all-important liquidity question. There are really 4 areas of focus that I'm making recommendations on for folks right now. And the first is a line of credit. Many of you have lines of credit today, I'm sure. If you don't, this is a great time to ask for one with your bank. But if you do, the recommendation that I'm making to all of my clients is to draw down the majority, if not the entirety, of their line of credit and take that cash and put it in the bank right now. The intent would be to hold it for 60 to 90 days and then return it right back to the bank. That may sound really counterintuitive, but if we went back to the financial crisis 10 years ago, what happened very quickly was a credit crunch. And when that credit crunch hit, banks turned off access to capital, including lines of credit. When they did that, if you hadn't taken your cash, you did not have access to it anymore. But if you do take your cash out in advance, then you have the cash already, and in most cases, the banks cannot take it back easily. One caveat to that is if your line of credit is collateralized by investments or other assets, you need to be careful and look further into this. But most importantly is getting access to that cash now. And while the holding costs certainly are important to consider over the next 60 to 90 days, the unknown is what we're dealing with right now. And in that unknown, it's important to have that extra cash on hand. The second component of my recommendations are accelerating receivables. Calling your partners who you've done work with, and I'm sure are longtime partners of yours, to just talk to them compassionately and empathetically about what's going on, talk to them about your partnership, and then bring up making sure that everything's on track with receivables and helping out. Importantly, you also have the opportunity to try and accelerate receivables at times like these by offering discounts. You could offer discounts for folks to pay earlier, or you could even consider financing receivables if needed. That's a longer and more complicated process, but it certainly is one that could be considered right now. The third category of bringing in more cash is actually deferring payables. And the simple questions in this category are you prepaying items? If you are, my recommendation is very quickly to stop, which goes into the second question is, are you using all of the terms that you have available to you? Many contracts that have 30, 45, 60-day terms, many times we just put them in the system, cash flow is fine, the checks go out in 2 weeks, and everybody's happy. Now is a really important time to step back, look at your top 20 or 30 payables, and ask the question, am I using the full extent of the terms that I have to make sure that I am maximizing the cash that I have on hand? And finally, and certainly not least, the SBA loans that we have out right now, the nonprofit rate on the disaster loans of 2.75%. For everyone else, it's 3.75%. That's separate from the payroll protection loans, which are 4%. If it's not forgiven, and also less liquid assets. You have other assets, equipment, real estate, other items that you may be able to finance during this time. And while those things can't happen immediately, if you prepare yourself to be able to leverage those assets, you'll be able to do that faster later. All of these recommendations are wonderful, but they're somewhat useless without having a cash flow forecast. Having a 13-week cash flow forecast that predicts what's coming in versus what's going out and updating it on a weekly basis during a time of crisis is an important way to manage through this process, especially if your business operates on tight margins or if you don't have a ton of resources to get yourself through the next 3 to 6 months. To that point, the great thing to have, I'd say, if you are able to get past the 13-week cash flow forecast, is to also be looking out 3 to 6 months to think about what the longer term impacts are for your business so that you can start preparing now. On the other side of liquidity, and certainly incorporated into it, is expense management. And while there's a lot of words on the page here, I'll just hit a couple of the highlights, which are really to evaluate your top contracts and turn your fixed expenses, or what may seem like fixed expenses, into more variable expenses. I typically tell clients to take their top 20 contracts that they're spending money on and look at all of the terms of the contract. If there are more than 30 days notice on any given contract, I typically tell folks to give notice to that contract by calling first to talk with your partner or vendor about the contract and tell them that, look, we're going to have to give you notice that unfortunately we may need to leave. By giving notice, you're turning what would be a fixed expense into variable expense. I think to make it a little bit more tangible or easier to understand, an example where a contract has 90 days notice, where you have to give 90 days before you're able to leave the contract. If you give that notice now, in 90 days, you're able to leave that contract, even if your intent is to keep going with that contract. On the other hand, if you figure out in 90 days that you need to terminate that contract, then you're going to have to wait yet another 90 days because you had not yet given notice to that vendor or partner in this process. I, of course, put a caveat on this, which is that the relationships that we all have with our partners, our vendors, our clients are really, really important. And so be careful, weigh the pros and cons. Don't just do this as a blanket statement, but pick and choose along the way to make sure that you're choosing the right ones. Because, hopefully by taking all of the actions you'll be taking today, when you come out stronger from this crisis, you will be able to leverage the most important relationships that you have to increase your strength. I think it's also important in times like this to remind everyone that everything is negotiable. You can ask for help from your community, from your vendors and partners and clients, whoever it may be, and terms can be negotiated at any time and renegotiated. So asking can't hurt. I think it's also important to leverage the new rules that we have during the crisis, whether it's deferring healthcare or payroll tax payments, and of course making sure that you're doing that in the context of the legislation that's going on. But just remembering that everything's negotiable and managing your top 20 contracts during this time are going to be really, really important. What I'm often finding in terms of the way people are thinking right now are two problems. Now that we've talked through liquidity and expense management and some of the very, very tangible recommendations, we're going to step back and talk about the more holistic approach to managing a crisis like this, because those are the really tactical things that I wanted to make sure everybody had with them walking out of this webinar. But what I wanted to really do is, for the majority of our time, is step back and think about what's really going on holistically. How are people approaching this? And think about the what-if scenario, that financial stress test that I mentioned at the beginning of the webinar. But before I do that, I think it's appropriate to stop here. Jessica, I don't know if you're receiving any questions from folks along the way, but this would be a good time to see if there are any questions that folks had about the more tangible or specific recommendations as they related to liquidity or the expense management.
Yes, absolutely. And I'm sorry for my technical difficulties earlier, but wouldn't be a webinar without them, I guess. But the only question I've gotten so far is if the slides will be available after the webinar. As I mentioned, we are recording this, so the whole recording will be available. And David, if you're comfortable, we can make sure that this PDF is available as well.
Oh, absolutely. Please do.
Yeah. So that's the only question we've gotten thus far.
Perfect. Well, I encourage folks to ask questions along the way because as someone who's managing this for dozens of organizations right now, we're seeing all sorts of different situations, and we'd be happy to help, even after this webinar. So I will jump right back in and, really think about the two mindset that I'm seeing from folks right now, which is one, ready, fire, aim. I'm seeing a lot of people making decisions with, immediately without asking any questions and saying, well, these are the things that I have to do first, and I'll worry about the rest later. And the second problem that I'm seeing is folks saying, I'm going to wait and see what happens. Nothing's really happened to my business yet, which for most of us is certainly not the case. But I see a lot of people saying, I'm going to wait and see what happens with my March financials or April financials. And frankly, when you're talking about a crisis situation, if you're thinking like that, you're already too late. And we'll talk a lot more about that in a little bit. But I want to walk everybody through the scenarios, through these what-if scenarios, so that we can have a better understanding of the problem and the solution. So when we talk about using a financial stress test to ask the simple question, what if? I really think about it in 3 stages. The first, assess the problem. Simply, what happens to revenue and cash when? And we have to set up that scenario, but really we're talking about top line changes to your revenue and cash, because without a change to those, there's no reason to be here today. The second is, after you make that first, you assess the problem and say, what might happen to my revenue and cash? We analyze the results and say, well, how much do I actually need to change? The answer might be, I don't need to change anything, or the answer might be, I must change everything. But now we've looked at it from an assessing of the problem, and now we can look at the results and figure out what our targets are in step 3. What am I actually aiming at, and when will I make the decisions that I need to consider? And those are the 3 steps that we're going to talk about here in a minute. Another way to think about it is assess, analyze, and execute. We're going to set up a stress test from a revenue standpoint and see the impact. If nothing else changes, if you don't change anything to your personnel, to your expenses, everything stays the same. And then we'll analyze the potential decisions that we have to make and put those decisions into tiers and measure them. What would happen if I make changes to my expenses? And of course, through the execution, we'll take action and monitor. But when we execute, we set a target. We have to say, where are we going, and take action against that target. So setting up a stress test, asking the hard what-if questions, I think of in a few ways. The revenue, I generally recommend for 12 months to set up any recurring revenue, membership revenue, people subscriptions that folks are paying for, to drop those by about a third. Anything that you have project-based or new business that you're expecting to come in, drop by 75%. And one-time income, drop by 100%. Take it away, as if it was not going to happen at all. And to what I said earlier, you're going to make these changes to revenue, and I guarantee you the first thing you're going to see is, oh my gosh, this looks impossible, the world is ending. Don't worry, just by putting these numbers on a piece of paper, the stress test is not in fact already happening. I find people go into this very negative space when they start this stress test, because all they look at is what happens when they drop their revenue and make no changes to their operations. And to that point, we'll leave payroll and non-payroll expenses the same as they would have been had you not made any changes to your revenue. There's 2 ways to set up this don't change anything with your expenses piece, and one is to do it based on run rate, which run rate is the last few months, anywhere between 3 and 6 months, if those are normal for you. If those are not normal, in that you're a very seasonal business, or there are certain months of the year that are very significant for you, then I recommend doing it based on your monthly budget and looking at that to set up your expenses. At the end of the day, your net revenue or your net income really is the result of reducing your revenue and maintaining your expenses in this stress test. But net income is really only the first layer of this question. The second is cash on hand. Because if net income says, are we making or losing money, the cash that we have available is what's going to tell us if we can survive through the stress test or not. Because frankly, I could have plenty of net revenue and no cash, and that would change everything. So it's important to consider both, and we'll show a specific example in a little bit. In fact, forget a little bit, we'll do it right now. I just made up a quick scenario that would show you how to set up a stress test. And at the top, we just put the revenue in recurring, project-based, and one time. In this case, I put it as if it was their 2020 budget and then their stress test. And their stress test, you can see to the very far right, just represents the percent change that we put in for their recurring, a third, project-based 75%, and one-time income all the way down to zero, which in total would represent about a 55% decrease in their revenue. Their expenses of payroll and non-payroll split into those two categories. We didn't change anything. So it would remain at $500,000. And of course, the net revenue drops by the same amount as revenue in this case, from what they had expected of $50,000 to a negative $250,000 number. Now, we then look at cash and the line of credit to say that we have a total of $150,000 of cash on hand. And so just to survive this stress test, our initial gap from a cash standpoint is $100,000. And if our target was net income or net revenue in this scenario, we would be looking to reduce expenses by about $250,000 in this scenario. I like to take this as a starting point and then create my own little cheat sheet, which is really simply if I looked at my either run rate or 2020 budget expenses, and you can see on the far left payroll versus non-payroll related, I just look at that total and I say, what is 10% of that? Very simply, I put 10% of that on an annual basis and then divide by 12 to the far right to get a monthly basis. And I create a chart. What would happen if I reduced my payroll by 10%, 20%, 30%, and down the left, my non-payroll, I would reduce by 10%, 20%, 30%. In the middle, I put that net income number and say, well, what would it be in each of these scenarios so that I can say, where will I be if I make these changes? And it's a really helpful way to set up a quick matrix that you can say, oh, I'm right here on this chart. And the objective is to understand how much change is actually required. And I'm just going to show you a quick generic example, that in real time of a client that we did. I'm going to skip a couple of slides here, but I just wanted to show you what this would look like if you did this. The center of each of these charts is the net income or net revenue. In the top is net income, and in the bottom, it just adds back your cash and says, so we would have to drop payroll by 40% and non-payroll by 40% just to have a positive net income in this scenario. And if we added back the cash, we would then have to talk about payroll expenses changing by 20% and non-payroll by 40%. And so there's a lot of numbers on the page, and we don't need to go through a ton of this, but I wanted to show you what the stress test then looks like in real time and a real example. But in your case, you can simply set up as simple as this kind of table right here, and then ask yourself the question, what are the decisions that I could make or need to make or want to make in this scenario? So your tier 1 decisions to delay and defer and cut non-essential expenses or non-performing payroll are the things that you can live without that much stress. Tier 2 is to reduce or eliminate functions that you will need to hire back later, but you can live without for a period of time. And tier 3 is reducing expenses to a skeleton crew, truly survival mode furloughs. And I say furloughs here, but the furloughs could apply to your non-performing payroll. The difference between letting people go on furloughs, I'll leave to the employment lawyers. But the point here is that you actually look and say, what are the first layer of decisions I need to make? What's the second and what's the third? And I should add really a line in here that goes from tier 3 back up to tier 1, because you may need to do this multiple times to get through a crisis. But setting up these decisions is half of the equation. And the other half of the equation is asking yourself the question, when will I make these decisions? And we'll talk about that at the end of the presentation, at the webinar. But for now, think about these 3 tiers and then go look at your expenses and say, what are the changes that I would make in each of these tiers in payroll and non-payroll expenses, and then measure the dollar impact annually. You will very quickly see how much flexibility you have in each of these tiers, and it will tell you where in that table that we talked about, where payroll was across the top and non-payroll were down the left side, where in that matrix you will actually be if you make these decisions. And I always, recommend looking at non-payroll items first to avoid the friction that comes with making changes associated with people. And of course, there's a huge caveat on this, which is be careful when making decisions. I've seen folks cut sales first, for example, that then becomes the self-fulfilling prophecy that you can't turn around and get out of the stress test scenario, and it becomes self-fulfilling in so many ways. And so I will continue to encourage as we go throughout this webinar that you are careful about the decisions that you're making, because it's important, just as important as getting ready to or making decisions right now is thinking about the future. And just to give you some examples, this is what a table might look like, with an actual client or scenario. Now, I think it's important to step back for a second and ask an important question. We just talked about these 3 tiers of decisions, but we didn't really ask the question, why should we make any decisions before we have more certainty? In a world where there is so little certainty right now, it's really hard to decide when to make the decision. And what I'm advising folks on right now is that if they're basing it on revenue, they've already lost the battle, because revenue is such a lagging indicator. You may have receivables right now that you think are totally collectible and fine, but they may get delayed at a minimum, and they may not be collectible, depending on how this situation continues to evolve. In that case, you've already provided services and paid out your employees and vendors, and you may not get that revenue. If revenue comes in lower, it takes a long time to make changes to your expense infrastructure, 2 to 4 weeks for people, and sometimes longer for vendors and partners. And so if you do not make decisions now to start staying ahead of what could happen, I certainly don't recommend making all 3 tiers of decisions right away. But if you don't give yourself the flexibility now to stay ahead of the uncertainty, then chances are you will always be playing a game of catch-up that will just become exacerbated as you're not only funding the cash flow changes that you have, but also the losses that you may have to your bottom line. And so the question that I'm asking everyone once you've gone through the stress test and you look at these tiers of decisions is twofold. One is, what are your leading indicators of stress? Some of my clients see them as somebody who doesn't return a phone call or pushes a meeting out by 2 weeks. All of a sudden, if there's a receivable or a contract that pushes out that far, very quickly we change and say, well, now that is an at-risk contract and we're not counting on it anymore. It's now added into the stress test. That is just one of, I'm sure, many that you may find as leading indicators in this process. And how can you measure them? They're not all going to be truly objective like revenue, and they will have some subjectivity to them, but paying attention and monitoring them closely will really help you stay ahead of the curve in these cases. I think this is probably, again, Jessica, a good time to just step back. I just, very, very quickly went through a whole lot of information and just wanted to see if there were any questions that were popping up. I'd be more than happy to answer them at this time.
I have not seen any come through, but again, if anybody has a question, please feel free to just type it in the questions box, and we will get to all of those before the webinar's over.
And yeah, great. Well, certainly if we're not seeing questions, chances are we'll be done in just a little bit here. But coming back to the presentation, this is all the negative stuff. This is all the challenging and the risk management and the things that sometimes may feel difficult to deal with. But very quickly, I find it critical to come right back to where we started the conversation and ask a very different what if. What if everything actually turns out better than expected and you made some decisions proactively? If expenses were reduced and things are actually going better, one of the first things that I'm recommending folks to do is look at the opportunities that may avail themselves during this crisis and strengthen their organization. There's a tendency to be ready to go back to the quote unquote normal that we had before this crisis hit 3 weeks ago. But the truth is that the world will look entirely different when we get out of this, however long it takes. But there are some unique opportunities. And I think a great example that came up recently for a client of mine is an interior design, a commercial interior design company whose clients, many of which have paused their project, has had a significant impact to their revenue. But what they realized is that with empty offices all over the country, this is a fabulous time to get work done in offices, so that when they come back, they will in fact be stronger and have a new face and a new look for what truly will be a new version of the world. And so they are pitching to clients saying, if you want to be ahead, getting ready for 3 months, 6 months, however long this takes, doing a refresh or a remodel of your office space that people come into every day right now will help you be ready with your clients as soon as we get out of this. And when we're ordering materials and when we're getting things ready, we will be first in line when everything opens again, and that will help when everybody else is backlogged and we are able to get the materials that we need. And so I say that example because it's an important way to change the framing, and they chose not to fire anybody from their company and instead took their entire team and focused on this particular opportunity. And they've had inquiries already and folks that are evaluating the opportunity. And I think this was only 5 days ago that they started this process. And so I really encourage folks to look at this moment and not just think about the risk, but the opportunities. I think the other opportunity that sits inside of here is think about what's changed. The labor market all of a sudden has 3.3 million people last week who filed for unemployment. And I'm sure those numbers are increasing by the day. But with that drastic change comes an incredible amount of labor that's available. Whether or not we're able to use it is the problem. But what if you were ready to hire before others? If you open up your resources and get ready, you could be 30, 60 days ahead of everybody else. And I have clients that are preparing positions that they are going to get ready to hire for well before this crisis is over, and be ready to pull the trigger and generate the interest, because there are so many people who were not dislodged as of 3 weeks ago from their very secure jobs that are now available to look at. So I think those are some great opportunities. And it's really a demonstration of the mindset that the purpose here is to be prepared and make the decisions that you need to make, but then get back into that growth mindset, strengthen your organization, and look at the specific opportunities that are truly going to help your organization not just get through the crisis, but be stronger afterwards. And I hope that message as you walk out of here resonates, because the purpose of making changes now, as much as it is survival, will also allow you to be stronger. And I can only hope for each of your organizations that becomes the case and becomes the actual self-fulfilling prophecy that you create. And so just to wrap up the webinar before doing any questions that there might be, just a quick overview again of the recommendations that were made during this webinar, and that is liquidity, expense management, and scenario planning. If you put cash in the bank, if you make sure to manage your top contract, and you ask the hard what if questions, what if revenue changes, what if I make my tier 1, tier 2, and tier 3 decisions, then I can be ready for the change that's coming and proactively be in front of it. And so I hope that this webinar was helpful for you and gave you at least a nugget, if not some opportunities to make some changes right now, but also to give you the confidence that when you plan, and it doesn't have to be overly burdensome, that when you do the planning, you can make better decisions, and those better decisions will help for the short-term crisis as well as the long-term strength of your organization. And so thank you again for Jessica, and the entire Better Business Bureau team for providing this opportunity, and I'll hand it back to you guys for any questions before we close up.
Sounds great. Thank you, David. I think you did a great job because so far it doesn't look like we have any questions. Please, if anybody does have a question, feel free to go ahead and send it over to me. I'd be happy to pass that along to David. But I did want to remind everybody that this will be, we're recording this webinar and it will be available on trustlocal.org. We'll send the link to the recording as well to all the attendees. And if you have any questions, please don't hesitate to reach out to me. I can definitely make sure if they're specific to this webinar, I can get you in touch with David. If you have any other questions about any of our other webinars, you can feel free to reach out to our BBB staff. All 4 of the webinars that we've had will be housed on trustlocal.org. But again, if there aren't any questions, which it doesn't look like any have come in, I just want to say thank you again to David. Thank you to all of you for being here. Oh, it's trust, T-R-U-S-T, local.org is the website that this will be on. We just had a question about that. So again, if there aren't any other questions, thank you, David. We appreciate everybody's time and stay safe, and we're here to help however we can, so please don't hesitate to reach out to us.
Perfect. Thanks, everybody.
Thank you so much.
All right. Bye-bye.
Bye-bye.
Hey, Mom. Hey, Mommy, you like honey?